Hello guys, welcome to today's session in Quancept, and today we will be learning about how to trade with the small capital. Okay, but before starting the video, if you are new to the video, you can go in the description, there is a link below. You can download and install the application. On successful installation, you will get 25 free tools here. Okay, so you can use them for your trading, right? Now here in the learn section we have video library, so there is a pool of videos, so you can go through them and you can learn about the pro tools also. Okay, in the language section we have multiple languages, so you can choose your preference. At any point of time, if you are having any kind of query, so you can go in the profile and here is a support section, so you can contact us. We have our phone number and email ID here. Okay, so you can contact us and we will be there to sort your queries out. Okay, so let's get back to today's topic. So today's topic is how you can trade with a small capital. Now the traders who are trading in today's scenario, many of them are having a low capital, a low budget. Okay, so the main question is how to trade with that, profitably and to make a consistent profit in the market, right? So let's get to the topic. Okay, so for example, the first thing that comes, that is the main aim when you are trading with the small capital is that not to make the profit. Okay, we are in the market to make the profit, but our main aim should be to preserve our capital, right? To preserve our capital, because if there will be capital loss, then we will not be able to trade further, right? So first thing is preserve your capital, and to do that you have to follow a step, that is don't take big losses. Okay, so you have to avoid big losses, right? You have to avoid big losses. Okay, now for that, first the thing that you have to do, you have to do the position sizing. Okay, your position sizing. For example, how much lot are you gonna take? Okay, how much lot you gonna trade in the market? Okay, for example, you are taking a stock, so how much lot you should take? Okay, how much quantity you should take to earn a consistent profit, and so that you will not get a big loss from that particular stock, right? So that is the main point. Now for example, I'll give you a scenario. For example, you are trading with a capital of 50,000, right? For example, you are trading with a capital of 50,000, so that is your capital. Okay, and now you made an entry and now you have put your stop loss of 10 points, right? Stop loss of 10 points. Now the maximum risk that you will take at the starting with this low capital, that is of 1%, right? That is of 1%. So if I'll take the 1% of 50,000, so 1% of 50,000, that will be 500, right? That will be 500. So the maximum loss I will take is of 500. Okay, and I'm putting my stop loss as 10 points. Okay, for example, there is a stock who is trading at 25,000, you can say. Okay, so for this stock, I am making an assumption that the market, if it will go against my sentiment, so I'll bear a loss of 10 points, and if it will go, with my prediction, so I'll gain a profit of 20 points, right? So approximately 1000 rupee profit I am expecting from that particular stock, right? So this is the loss that I'm ready to take it, right? So for that, how much lot I have to take? So what you can do, you can just divide this loss, okay, with the stop loss, right? So you will get the answer that you have to take the 50 quantity of that particular stock if you are ready to bear the loss of 500 and you want 1000 rupee profit from that trade, right? So this is how you can position your trades, right? So to position your trades is the very important point. Now also, for example, this was for the stock market, or if you are trading with the futures, but if you want to trade in options also, so for that, and you are having a low capital, so for that you can make a spread position also. Okay, let's see now what is a spread position. So in spread position, what we do, for example, if we are having a bullish scenario, so we'll buy a call. Okay, so we will buy a call. Okay, we will buy a call ATM. right? And at the same time, because my prediction, my scenario, my sentiments are bullish, that the market can go in the bullish direction. But in order to minimize my risk, in order to minimize my loss, what I'll do, I'll sell a position that is a OTM position. Okay, a OTM position. So a OTM position will carry, for example, a low premium, for example, 4.5, right? And for if I'm going with the ATM, so it means, for example, 10 rupees premium right now at the ATM. Okay, so if at any point of time, okay, if my market will go above this point, so I'll get a profit, and at any point of time, if it will go against my prediction, so this position will cover my loss. Okay, so my loss is now covered, right? So let's see how you can choose the spread position. So for that, in trading, we have option architect, right? So if you are going with the bullish sentiment, so we have the bull call spread and bull put spread. So let's see how you can choose this. So for now, if I'm taking coverage, right? So you have to select the same expiry, right? So I have selected same expiry. The strike price is right now, the market is trading at 6890. 6,899, right? So I am buying the ATM price, that is 6,900, and it is trading at 175, right? And with comparison to that, I am selling a position of OTM that is 7,000, okay, and it is of less premium, right? So you can see here, okay, now I have limited my risk. The maximum risk I'll bear, it will be of 6,000, but the maximum profit will be of 8,545. Right? So this is a debit strategy. Okay, so what you can do, you can predict your losses in advance. Like the maximum loss I'll bear is of 6,000, not more than that, till my expiry, right? And similarly, the maximum profit that you can get, okay, you can also predict that. Okay, so this is how you can predict your stock losses and profits, okay, with the spread strategy. So similarly, you can create this strategy for the bearish market also. Okay, so here we have bear call spread, bear put spread, and many more. Okay, so you can also learn about them here in this feature, that is how to use them. Okay, now the third point when you are trading with the small capital is that, wait, let me move it. Okay, so the third point is that you should trade with high probability trades. Okay, so always take high probability trades. Okay, high probability. What it means? It means to select those stocks which have high probability to go in the particular direction of your sentiments. If you are making a bullish scenario, so those stocks should be, high probable stocks. Right? How you can do that? So you can choose a scanner. Okay, so we have multiple scanners here. For example, in track option, you can go in the built up sectors here. Okay, so you will get an overall idea of the market, like if the market is in momentum or not. Okay, so for example, I can see the IT sector is in good momentum. Okay, so it is giving me a a built up of long. Okay, so it means market में तेजी आ सकती है, right? So what I can do, I can go with the IT sector, right? Because it is high probable that it will give me a good profit if I'll buy. Okay, if I'll buy this stocks of IT sectors or NBFC in comparison to this oil or PVTV or power or reality, right? So I'll go with the trend, right? So this is the scanner that you can use. Okay, so here we have the sector cycle also. Okay, and in sector cycle you can go in the built up script symbol. Now if I'll select the IT sector which was trending, okay, so I can select IT sector, so I can see some stocks, right? Now instead of looking so many stocks and doing trades in a random stock, what I can do, I can choose a sector which is in a good position, which can give me a momentum that is showing me through the scanner. I can select stocks from that particular scanner, right? So it will give me a high probable trade. So that is why you can use this scanner for, right? Now the fourth point will be, don't trade in penny stocks. Okay, don't trade in penny stocks. Now many traders, if they are having low capital, so they go for penny trades. Now what is the reason I'm telling you don't go for the penny stocks? Because the first thing is that your capital will be locked in for a long period of time. Okay, so your capital will be locked in. So if there will be some good momentum in the market, so you will not be having capital to trade in that particular trade, because you have already capitalized, you have already invested your capital in this penny stocks. right? So this is one thing. Second thing is that take the stocks that has less time period, so that you will get more opportunities in the market, okay, and the theta will also be in your favor, okay. So that is one of the point if you are trading with low capital, so don't go with the penny stocks, okay. Okay, let's move to another. Okay, the next point, fifth point, is that always trail your stop loss. Always trail your stop loss, right? Why? Because if you are having a low capital and at any point of time, okay, if the market is going, okay, with your sentiments, if the market is going with your direction, so you don't want to miss that opportunity, okay, if the market goes in your direction, so you want to enjoy that trending market, okay. So for that, what you can do, you can just trail your stop loss, right? Now how to trail your stop loss, that is also one of the questions, okay. So I'll answer that also, okay. For example, let's suppose you are having, okay, the current strike price is of 100, right? And you are ready to take a profit of 120, okay. So this is your target, and for example, this was your stop loss, okay. So I'll take a stop loss, so 1:1 ratio I'm taking, right? Now you are taking a stop loss of 20 points, that is of 80, and a target of 120. Now at any point of time sorry, now at any point of time, if your market will go, for example, 122, okay, so what you can do, you just don't have to wait for your market to reach at first target, then second target, and then you will trail your stop loss. No, if your market moves by 2 points, right, if your market moves with 2 points, just trail your stop loss with 1 point. So for example, right now your stop loss is 80, so then you can trail your stop loss with 81, okay. And similarly it will go on. For example, now if your market had reached 124, sorry, 102, so yeah, from 100 it has moved 102, so from 102 I am taking my stop loss 81. For every 2 points the market will move, I'll shift my stop loss to 1 point, right? This is how you can trail your stop loss. Now if my market will move to 104, then I'll shift my stop loss to 82, right? Similarly 106, so I'll shift my stop loss to 83, right? So for every 2 points move in the market, I am trailing my stop loss with 1 point, right? So for example, if your market reaches at level of 110, right? What if your market will reach at 110, okay, and at 110 your stop loss will be 85, right? Now from 110, what if your market will come back again at 102? So will you make your stop loss 81? No, I'll keep my stop loss 85. Okay, if again my market comes from 110 to 102, I'll still make my stop loss 85. Okay, so this will help you to preserve your capital, right? To you will not get a big losses, and you will make a consistent profit out of your small capital, right? I'll give you a scenario. For example, for if your market is, if your market is falling and you are having a loss, right? For example, you are taking a stop loss of 10%, okay, and you got 3 stop loss, so now you have your 30% of the capital is depreciated, right? Now to gain your 30% of this capital, the market should move. How much? The market should move approximately 49%. Okay, so only if your market will move 49% approximately, okay, only then you will be able to recover your capital back. Okay, so for example 50,000, okay, for example 50,000, and you have lost 30,000, so in case you are remaining 20,000, so to build your capital again 50,000, you need a 49% move in the market, right? So the your loss will be it will be in a very faster way, okay, and when you are going to recover it, so it will be in a very slow manner. So that is why it is very important to avoid big losses and to maintain consistent profit in the market, right? If you will ask me, if I have a 50,000 capital, if I have a 50,000 capital, can it be, from 50,000, can I make 1 lakh in 1 month? I don't know. Maybe yes, maybe no. Okay, but from 50,000, can this capital be, zero? So the answer is definitely yes. There is no doubt. It can be zero from 50,000, but it can be 1 lakh from 50,000. Maybe, maybe not. I'm not sure. Okay, so that is why to delete this probability, what we do risk management. Okay, we do all the steps that I have shown you earlier. Just trail your stop loss, don't go with penny stocks, right? Maintain your position. Okay, position sizing is very much important. So these are the steps that you can take while you are trading, okay, in equity or in options. Okay, so that will make your trading journey more profitable, right? And you will generate a consistent profit out of the market, right? So that was it for today's session, guys. Okay, if you like the video, okay, you can if you like the session, you can like the video, you can comment us down. Okay, if you are having any kinds of doubt, if you are new, so you can subscribe the channel also. Thank you so much. This is your trainer Ankit Singh Rawat. Have a very good day.